It is Monday, first trading day of the week, and we are back and we are live. It is Tackle Trading's Halftime Report, the daily show where we go through these markets one step at a time, looking at stocks, commodities, currencies, cryptocurrencies, individual companies, discussing the news, charts, whatever really driving the markets, moving the markets, break it all down, give you our insights here from the coaches at Tackle Trading. And welcome back to our show. Got a good show planned for you here today. Coach Gino is joining us to break down the sectors. He does the newsletter over Tackle Trading each and every week. We're going to get his thoughts, his commentary on what's happening on a sector by sector basis. Coach Mark is here as always on Mondays. He's going to be analyzing the commodity markets here in a little bit, also giving market commentary. I've got Coach Matt doing the lead analyst as he always does. And myself here as your host, Coach Tim Justice, and welcome out to our show. If you're a veteran of our community, you know what I'm going to ask you for right now. Hashtag Team Tackle right in the chat. That's our official hashtag here at Tackle Trading. Way for us to kind of just represent what we're all about here as a team, as a community, getting together, help each other out regularly as we navigate the markets. Let's get down to business, though. Let's talk about what's going on here. Obviously, equity markets are up near the highs. We're up near all-time highs within basically a percentage point. Rallied on Friday into resistance, didn't break out of resistance. Here we are stalling here today. Pleasantries first, though. Let's bring in Coach Mark. Mark, how you doing today, sir?
I haven't had my Coke/coffee caffeine of the day yet. And it's a little weird. We're creatures of habit, and I feel a little off because I haven't had it yet.
Wait. Now, I don't know this about your own personal morning routine. Do you go Coke and coffee?
I oftentimes do. Like, I'll get the Coke and coffee from McDonald's, which is just a couple, like literally 60 seconds away from my house. And don't think it's a coincidence that McDonald's is I scouted that out, to make sure that it was there before I bought the house. So,
had to get in front of that other McRib speed rush, huh?
You got to listen, when the apocalypse comes, you got to just know where the supplies are. So.
Coke and coffee to start the day sounds a little bit off to me, but hey, man, I'm not going to judge you. If that's the way that you get up and running and rolling, I'm down with it. Matty, how you doing today, sir?
I don't know how his Coke and coffee is any different than your pot of coffee back in the day, but I'm doing absolutely fantastic, Tim. I'm excited to be here with the crew and to have Gino come on and talk sectors, mark commodities, and get our team ready for the week coming at us. Always fun to do. So I'm excited to be here today.
Absolutely. And Gino, I mentioned your name a couple times. Come on in.
Speaking of coffee, mind you, as you were doing pleasantries with Mark, thank you for once in your life taking more than like 2 seconds in pleasantries, because I had actually spilled my coffee all over my desk. So I appreciate
Get the keyboard?
Dude, it missed some things that I'm wondering how it missed. But we're good, bro.
Dude, I had to complain. If I wasn't going to complain to you, who was going to go complain to?
Dude, you can complain to me all the time. Let's roll.
That's right. Gino, how you doing, sir?
Good, man. Good. How you doing?
I'm doing
great.
great.
That's 2 second pleasantry right there.
What's going on with Gino today?
Gino still needs his coffee.
It's Freaky Friday, where like Lindsay Lohan switches bodies with her mom. That's what's going on. Gino and I switch personalities.
Lindsay Lohan.
Lindsay Lohan reference. Freaky Friday was a funny show, actually. I enjoyed it way back in the day. Let's talk markets here, guys. Matt, obviously, we're hesitating at resistance here. 42.38 on the S&P 500. Obviously, ticked that in early to mid-May as we were navigating earnings season. Here we are in a light news week, kind of in that regard. We're in a void zone in many different ways. Waiting on a Fed meeting in a week and a half. We got some certain items here this week, like CPI, we got to pay attention to. But let's talk about technicals first. I mean, how are you reading the chart here?
Yeah, looking at the market from a technical perspective, we'll get into those hypothetical catalysts that could drive the market here in just a moment or so. But looking at this technically on Friday, saw a little bit of a breakout on Friday. The breakout was from an intraday perspective. As you can see here, you're in a wide range neutrality from an and again, we're talking intraday perspective on a 30-minute chart. But you're looking at just a neutral condition between 4180 and really kind of that 4200 level, 4210. Once you break out of that, as you can see right here on Friday on that no sell day candle, we like those no sell day candles. You break out here, but where do you come into? You come into that top range of the resistance channel, coming back out to the daily chart. You see that top range of the candle over here. See that top range of the candlestick over here right there. And so you're just kind of stuck against the mud right there, hitting your head against resistance in the S&P, and you're trying to find that catalyst to break out of it. But it's probably not a day where we're basically talking about a global corporate tax, right? Global corporate tax. So a little bit of just nothing from a news perspective today. And when I mean nothing, I mean like there's not an enforcement body, nothing. So kind of one of those news stories where it's like a big story and then it's like, well, maybe it's not that big.
Yeah.
Right. Not really the catalyst to really kind of drive price, but where the action is from an index perspective, and we'll certainly break this down from a sector perspective as well. But the action, and again, you're going to have a very similar read in the Dow Jones. Obviously, test up on the futures last night, coming back down on the cash today. Looking at the Nasdaq, which did get a nice little upgrade in our newsletter from a sector perspective. Seeing a little bit of a breakout on Friday, hesitation candle here today. Nothing to really kind of be overtly concerned about from a technical perspective in the broad market, but where the action is, and we're up relative strength here on a no sell plus 1% day, is the Russell 2000. And somewhere this morning on an early Monday morning, Coach Tyler Craig is over there celebrating and touchdown dancing a little bit. You got the breakout, Coach Tyler. Look at the breakout here. Look at the high base, riding the lightning of the 9 EMA, breaking out of that 2300 zone. Let's look at the strength of the breakout very quickly. Look at that neutrality. Look at the Russell just destroy all of those intraday resistance levels as it shows momentum breaking out. And the catalyst, again, coming back down to, for me as a top-down analyst, catalyst and logic and reason are always important on potential type of opportunities in the market. The global tax, where basically the global elites agreed on a 15% corporate tax, obviously that's going to be well discussed over the course of the next couple weeks, couple months. But wherever the impact of that increased tax from a global tax perspective happens, what is not going to have a big impact in that I think all of us understand at this point is stocks that primarily just do business within the United States. And when we're talking about S&P components, when we're talking about Nasdaq components, when we're talking about Dow Jones components, we're not, they might be based in America, but they're not American companies in the sense of where the largest percentage of their revenue comes from. And so when you're talking about these big companies that the global elites are trying to, target from a tax perspective, you're really looking at S&P companies and Dow Jones companies. You're not really talking about your $2 billion company out of Missouri or New York or California. You're not talking about, your small, your micro, and your mid-cap companies. And so you're a little bit of a catalyst to justify the price action and the momentum that's happening on the overnight. But regardless of regardless of the level of importance that you give catalyst on breakouts, and again, I give them fairly important because I see themes develop there. But regardless of that catalyst, or regardless of the importance of that catalyst, the breakout here is important. You're achieving the 2300 short-term resistance level. You see the range. We just talked about that range in the S&P between, once again, let me give them the numbers, but it was like 4,200 by 4,230. Top end right there at about 4,230. Coming back down to the Russell 2000 very quickly. You see that range develop right here between 2,300 and the top end channel right there at about 2,320. And where are we at right now on this no sell day candle here in the Russell 2000? And again, I'm going to give a lot of credit to the global elites here, number one, and I'm going to give a lot of credit to Coach Tyler, number two, and I'm going to put Coach Tyler in the same sentence with the global elites. He's going to enjoy that one. But you got to like the breakout. It's hitting up against the top end of the range here, but it's got momentum. Can this, and this is the question I have for Coach Tim, Mark, and Gino. can this discussion we're having from a 15% global tax perspective, can that be the catalyst that the Russell 2000 has been thirsting for really kind of the last 4 or 5 months, as the long-term fundamentals are catching up to that quick price action that happened after the election?
Mark, I'll let you answer that first. I mean, what are your thoughts on this? Obviously, there's a news
two
story
thoughts.
over the weekend.
First of all, I was also thinking of Tyler. We spent a lot of time thinking of Tyler Craig this morning because I was going to something Tyler said
that says about us.
Trade Masters. I was going to bring up in the commodities section, and I was doing the Tyler Craig impersonation, and it ended up sounded like Joe Pesci. So I don't know.
You got to do it now. I'm thinking Goodfellas. You got to do it now.
I can't. I'll work. I'll see if I can. I'll see if I can gather myself for the commodity report. I don't know, man. I mean, because there's nothing about that makes small caps better themselves. Now, does it make them maybe theoretically relatively stronger to bigger companies on this one news story? Sure, I get it. So I get the price movement catalyst, algorithmic trading, but there's nothing independently that says, all right, now small caps are going to be paying more dividends because of this. Small caps are going to be showing more profit because of this. It's the relative versus a tax. And I don't know if that's sustainable as small caps, that kind of catalyst to send you up. Now,
well, let me ask it a different way, Mark, because and I'll just be as straightforward and direct as I can. The global elites can talk about whatever they want from a tax perspective. I would still like to know the enforcement policy. Okay. Mm-hmm. I again, say whatever you want, but what are you going to do if a corporation doesn't pay the tax? Or like, what are we going to do? Bomb them?
Yeah.
What are we going to do? Get like economic restrictions? Like, I would like to know enforcement here. What agency and what rules and parameters would be in the enforcement? So at this point, yes, it's an important market story, but quite frankly, it's kind of laughable at this point from my perspective.
Yeah, I mean,
so, Mark, let me ask you a different way.
I didn't even get into if it would actually take place.
Yeah, it's the theme, though. Remember, it's the theme. Can it be that catalyst that starts to see the Russell 2000 more as growth environment that doesn't have to deal with some of these additional conversations that we're having in, say, the S&P and the Dow Jones?
I spent a lot of time this weekend thinking about major themes that drive the market because I do that every weekend. It's the number one thing I do for our Sunday night prep class. What are the major themes? And I spent some time, I like my major themes to be simple. 2017, global synchronized growth, right? Everybody got it. It was easy to understand. And then last night, when I was preparing for the class, I was thinking about the end of 2019 and that September, October, where the markets have been trading sideways for a couple weeks, not a couple weeks, a couple months. And then you had the ceasing of the trade war. The rhetoric turned to, hey, we're making progress. A very easy theme to understand. This doesn't strike me as an easy theme to understand.
Well, it's not. Okay, it's not. But it's as simple as this. Big companies might have to deal with additional tax. Small companies don't. That's simple to understand. All the political, economic enforcement conversations that are also part of this macro conversation, those are complicated. But it could be as simple as, we don't have to deal with this over there. Let's go over there. Oh, there's a bully in this sand trap. Let's go to that sand. Right. It can be as simple as that when the market does rotate themes. And again, for me, regardless of whether or not this is a legitimate catalyst, it's a catalyst for today.
Without a doubt, it's a catalyst for today.
We'll see if it's a catalyst in the future, if the price continues to follow in the direction of the immediate reaction to it. But I do think it could be something, and it's something we have been talking about the last couple of weeks with, Mark, the underbelly waking up a little bit, the small and the mid caps waking up a little bit, starting to show a little bit of double bottoms, double bottom, double top scenarios with potential reversals in things that were, quite frankly, high flyers in 2020 and in 2021 have been nothing but dogs. And so we're seeing a little bit of what makes up the Russell 2000 and the underbelly wake up over the last couple of weeks It's had that opportunity in the past, though. It's had that opportunity in the past. Nice little legitimate breakout. But what happened? It ran a mile into that breakout, obviously got snuffed out pretty quickly, right back down. Ran a mile into the breakout, ran a mile into the breakout. Unlike those other times when the Russell 2000, because on these attempts on the breakout, guys, we were recycling the same headline that drove this here.
Mm-hmm.
It was just us that said it's over. We said it's over here. But the entire market kept recycling that exact same headline. Well, on this breakout attempt here, I do have it technically a little bit differently than the other attempts on the breakout. Number one, you're not running as far into the breakout this time. And that is because of this price movement here. When you have 4, 5, 6 days of consolidation and that 9 EMA catches up to it, all of a sudden, instead of an overextended pattern coming off support, you're now looking at this as a high base consolidation in front of a breakout. That's an important technical distinction, in my opinion, in comparison to the other attempts at the breakout when you ran from 2160, 2100, 2100. You ran a little bit of time getting into those potential breakouts. And again, looking at it historically, just going to do it. This time, I feel like you're running from 2258, 2260. I think you got some room to run here, number one. Number two, I also think from a catalyst perspective, and those things, Mark, I agree with you that we don't know if this is going to become a theme or not yet. We're kind of making fun and making light of it a little bit because, again, enforcement policy, I'd like to know what enforcement policy is there, but it does have the hallmarks of what can drive a theme. And so when you're looking at the catalyst and what could drive this market and capture the attention, I do have this as a little bit of a different catalyst this time around, given the fact that we were talking about literally the exact same thing here, 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 and here. And that was coming out of the pandemic. Tim, you can finish the thought here. Economy reopening,
cyclical stocks lead,
there
energy,
you go. There
financials,
you
you name it.
Right? That's not what we're talking about this time. We're not talking about, vaccine distribution. We're hitting 1.1 million vaccines. Yeah, from that perspective, at this point in the ball game, guys, we're talking about vaccine contraction right now. And so we're having a different conversation as well. And this time we're talking about, well, at least we don't have to deal with Europe trying to pilfer 15% from Amazon. Right. And so I do think the conversation is a little bit different. The technicals are a little bit different here. The Russell 2000 has the chance to wake up here, guys. And again, Coach Tyler's been talking about it for the last couple of weeks, waking up. Mark, you've been talking about the underbelly waking up. Both of those underbellies or small caps kind of in the same. They're not the same ballpark, but they're in the same arena. Right.
Yeah, yes, absolutely.
And so we're seeing that from a technical perspective. You're seeing last week, what did we talk about? Not just, and I'm not just talking about we as in tackle, but we as in a trading community, right? An investing community. All of a sudden, AMC, GameStop is in the discussion as well. Obviously, fit into this theme as well. So it's going to be interesting to see if this continues to move. But I do think you have to be impressed with the technicals. And again, at least we're talking about something that is fundamentally slightly different than the conversations we were having and recycled conversations we were having in the Russell 2000.
Well, and from my perspective, whether the news is a long-lasting theme or not, if it can break it out technically, the Russell can find its own legs on technical merits. I mean, if the catalyst in the short term
I think that is a good
enough,
point. Now, a theme can send it into a prolonged trend, but
and
a news story.
Go ahead, Mark.
Can have it take a leg up. I mean, and when I talk about a leg up, we pull up Shopify because sometimes breakouts happen and then that trend goes and goes and goes.
Breakout can drive it up 1% on top of the breakout.
Sometimes breakouts happen and like Shopify traded in a sideways pattern like the end of 2020, and it broke out, right? And it's a little bit higher, but it wasn't exactly. It just kind of ranging at a little bit higher level.
And I get the pure technician is going to be like, well, a breakout to breakout, and I just fundamentally disagree with that statement. It's not. A breakout tied to a catalyst can have a true leg that is inspiring. A breakout technically is caught by algorithms and lasts 2 days before something else gets snuffed out. And so I totally understand the point of breakout. It's breakout, but there is a difference, in my opinion, from a breakout tied to a catalyst.
No, it's why you and I are top-down analysts, man. Yeah. Because like
the pure technician misses that one.
And the pure technician misses, and I'll trust our instinct on, on that kind of stuff.
So, and don't get me wrong, top-down analysts have other issues they have to go
the
through.
Pure technician will not spend time overthinking and miss a good play because, I don't know.
Yeah, the pure technician's not overthinking 90 million different things.
But we are who we are, right? Yeah. We are who we are.
Is anybody really truly a 100% pure technician?
Yeah, an algorithm. Frank Martin is a pure technician.
Frank Martin does not care about anything you have to say from any.
Tyler is a pure technician-ish. Frank's 100% pure.
I want to put Tyler.
I was thinking about
Tyler. I want to put Tyler pure.
He's mostly a technician, right? But he also, I have conversations with Tyler.
I would say Tyler's 80s.
Oh, compared to
Frank's 100%.
Tyler's a rambling drunk that just makes random decisions. Right?
Guys, I've had 3-hour conversations with Frank where at the end of the 3 hours, he's like, yeah, I don't care anything you just said.
He does not care.
Did it break out?
He's like,
yeah,
here's
broke
the
out,
charts,
Frank.
here's the technician.
We're good.
Got it. Yeah, got it.
Everybody needs a Coach Frank in their life. Everybody does.
I agree.
It's simple.
We all need a fundamental analyst in our life. We all need theme-based analysis as well. That's why it's a good balance to have all of you guys' insight on this. The Russell's early on this move, but it is showing notable strength here today, up 1.2% against the rest of the market. Maddie, obviously, here we are pushing those technicals. Does that breakout back at 2366 still? It grabs my attention.
Yeah, of course, it's got to grab your attention, and you're still in the zone here too. So even if you break out of the 2320 area, you are looking at that 2366. And Coach Tim, I do think you're a little concerned here because we've tested, right, a wick here, a wick there. We've tested. What we have not had yet, and what a pure technician would say is, we hadn't had a high base coming into the potential breakout with the confirmation candle. You had the hallmarks here. You had the hallmarks here. Never confirmed. Never had a no sell day. Now, this is really kind of your third attempt in that same high base scenario. Again, same high base scenario here. Same high base scenario here. Same high base scenario here. We tested above. Didn't even come close to confirming. Tested above. Didn't even come close to confirming. Tested above. No sell day so far, guys.
Yeah.
Let's see how it's going to finish. But I do like the technicals coming into it. And quite frankly, I'll just say it one more time. We were recycling the exact same scenario throughout these entire breakouts. The conversation is slightly different this go around.
Which leads to obviously the analysis here today and why we're focused on it. We'll keep watching it throughout the week, no doubt about it. Anything else on the other indexes grab your attention there, Matt? No. Obviously the Dow, the S&P, they're kind of looking similar. The Nasdaq did catch an upgrade, but we'll talk tech here in sectors in just a minute.
We'll get into the sectors here in a second. But I think all of us coaches at Tackle Trading, we do like the Nasdaq, and the Nasdaq has a little bit of a hesitation candle here early on a Monday, starting this week. When you look at the actual sector, very similar. You got that really kind of that no sell day Friday close. That's a breakout there. Little hesitation, but still hasn't violated any intraday support levels that I can see here. As you can see, the old resistance breakout channel right there north of 139, still above that level here early on the day. So I think all of us like the Nasdaq, and we're all looking at some potential trades there in the Nasdaq comps and these types of aggressive areas of the market. But this is just a hesitation. The price action and the action you're seeing is in the Russell 2000 today.
Yeah. While we're talking equities, though, let's move right into sector analysis and bring Coach Gino in here. Gino, one of the veteran coaches from Tackle Trading, obviously 20-year veteran of the market. He does our newsletter each and every week and kind of breaks down these sectors one at a time. Gino, what are you seeing in sector performance? Let's also go through the ratings of these sectors, kind of what we're looking at from that. What are you watching for in these sectors, and which sector do you want to start with here, Gino?
Well, I always like to start with, of course, technology, because it is the biggest sector of the S&P as we rank them with the XL sectors. You know, we like to use what we call the sector spider ETFs, and it's a good breakdown. That's like the internals of the market. So, Tim, what I do on the newsletter, which I've been doing for many months, is, and I did something a little bit special this week with the newsletter on the gridiron, is we rank the sectors, and we start with the dollar and we go in the S&P. The S&P is holding up pretty good. You know, it's been in this nice, about we call it a 20 range, which is bullish for a while. And we'd like to break down, okay, what sectors are leading, what are lagging? And the last few weeks, you know, actually last couple of months, all the sectors have been in the green. You know, all the sectors have been in the green. And it's not hard to find bullish trades. The hard part is to find bearish trades, right? So what's holding the market up? And what I look for is, like any trader, is any signs of a breakdown, you know, like any signs of, okay, what's going to break down, being on the alert. And of course, technology, if you were to balance out the market cap, it's 26% of the S&P. So I like to start at the biggest market cap sectors first. So looking at technology, which we look at as XLK, right now we have that ranked right with the market as bullish. And of course, if you bring that up, I'm looking at that on both. We would look at it both daily chart and weekly. And really look at the daily. We had this nice breakout of this little flag pattern on Friday, and we're looking for a follow through there. Now, when I say internals of the market, yes, we start with technology. Then I take it a step further. What are the internals of that sector? Well, that sector, the biggest market cap by far, nobody compares, is Apple and Microsoft. So real quickly, take a look at Microsoft. And I just want to kind of hit on one or two stocks in each sector so you can see what I look at. Look at the setup of Microsoft right there. Kind of a cup and handle, right? Kind of a little inverted shoulder and a head there with a little bit of overhead resistance. But that Microsoft, being one of the leaders of that sector, actually moves that sector. It's by far one of the biggest market cap next to Apple, which speaks as if you look at Apple, it's actually doing the exact opposite of Microsoft, almost the exact opposite pattern. So they kind of wash each other out. Two very heavily traded stocks, two very popular stocks. Those two right there, just Apple and Microsoft, they are almost the majority of that sector. So what's interesting, what we were talking about, Tim, is small caps have been moving the market, right? If Microsoft and Apple just start stuck in the mud playing tug of war, you have to dig deeper into the other ones. You have to dig into the smaller caps that are moving that sector. And that's what the interesting thing is these two guys right here, these two big behemoths of stocks, they've really done nothing for a long time, if you think about it, right? But when you get down to it, who has helped that breakout? Most of that was contributed to NVIDIA, NVDA. That was a big breakout last week. I'm expecting a pullback there, you know, because it's overextended. It is the next in line as far as market cap in that sector. So we'll see what happens from there. And then we get into Visa and Microsoft, which are in technology, but I actually place them in financials the way I look at them. And financials are doing great. So looking at technology, Tim, definitely we're still strong there. There's a lot of strength in there. Looking at the semiconductors, which is a component of that, it's an industry of that sector. Semiconductors are looking good. I'm seeing on the semiconductors, which again is a big sector. It's not only technology industry, it's also communications and pretty much everything, you know. I mean, semiconductors and everything. When you get into vehicles now, everything, communications, a lot of the companies in there.
Sure.
I mean, even real estate. If you think about it, semiconductors is huge in real estate. Now you're thinking how? Well, in the real estate sector, which is also really hot today, it's the cell towers, these cell tower REITs, AMT, CCI, and all these cell towers. And it's a real estate company. You know, you start digging deeper in that, you start going, oh, that's why real estate's doing so darn good. You know, there's a lot of technology behind it. But anyway, getting into the technology, Tim, we're standing strong on there. Again, 26% of the market. So if you think of it this way, it's 1/4 of the market of the 11 sectors.
So you like the improving chart on Microsoft and tech. You love the breakout on NVIDIA, which led to some strength last week. Semiconductors you've been watching. And quite frankly, a nice little bounce on Friday propelled the upgrade. Tech is not our top rated sector, though. It's the biggest sector by market cap, like you're talking about. Which is why you started with.
Next two.
Mm-hmm. What do we got at the top?
Well, we got financials, which is our third biggest sector. And you know, we got materials. We'll get into materials in a second here. Materials has been a leader for a long time, but financials, I'm seeing a lot when you break down those stocks like Berkshire Hathaway, JP Morgan. Now, this sector has been hot for a while. We have what's called a lot of breakout patterns. When you look through the stocks there in financials, we're getting a lot of breakout patterns like JP Morgan, Bank of America, these like called bullish wedge patterns. Another bullish triangle, Wells Fargo. Citigroup's pulling back, Berkshire Hathaway's double top trying to break out. All those guys have been leading and trending for many months. Mm-hmm. So financials is actually the third biggest sector, and it's definitely helping the markets. That's one of the biggest drivers of the markets. Now, of course, we do.
Let me take a quick peek at these from a technical perspective, Gino. When you started off with technology here, talking a little bit about the tug and war action that Microsoft and Apple has been having. But when I look at kind of, you know, the semiconductors waking up, and they have been waking up a little bit in recent history. But when you're looking at the semiconductors and the importance that the semiconductors have, you are correct, to the entire broad market, but specifically to the Nasdaq and the technology components, you're looking at a market that just got a little bit overextended in the short term, has not broken out of its range yet. I'm still looking at that 440 price level, but if we can achieve that this week, guys, in the SOX, looking at the technology sector here, that's going to carry that breakout here that happened on Friday. Mm-hmm. And so I think one of the reasons why a lot of people are now waking up to, you know, the technology space right now is, number one, you are looking at a little bit of a cup and handle, Gino, but you are looking at a high base scenario that also broke out of resistance and is now clinging on to that last resistance of 140. You get a combination SOX breakout with the NASDAQ breaking out. You're going to see some legitimate price performance there. And yeah, you know, Microsoft is an opportunity. I wouldn't say Apple is. You know, let's see some love on Apple. Let's see some of that 200-day moving average love come in on Apple. And not just, you know, not just hang out here. Let's see that come in and let's see that spike. Let's see some love getting above 128. Let's see some love getting above 130. Let's get above these moving averages before we actually have a conversation on Apple. When you're looking at Microsoft here, you're looking at a legitimate scenario where you're hugging that trend line. You come down into the trend line, you break out of those moving averages. What Gino said in the cup and the handle on Microsoft is 100% accurate. You get the cup, you get the handle, then you get the breakout. It's not clean, but it's Microsoft, so you got to be looking at it at a very minimum to see where it can go and how it can drive that marketplace. And if Microsoft wants to run and Apple wants to sit down at the 200-day moving average, I don't have a problem with that. So when you're looking at technology space, yeah, you're looking at a potential breakout. And because of that potential breakout in the tech space, because of the recovery over the course of the last 2 weeks, and because of the defensive nature last week, if you guys don't remember, the Nasdaq had a scary moment last week on Thursday where it broke back down and it almost gave up this entire thing. But the response on Friday was very, very important. Not only did it fail this breakdown, it then broke out. That's a pretty big shift in mentality from a technical perspective for me anyways. Technology, nice little upgrade right there, moving in line with the market and coming back down to the strength of the market. When you're talking about the themes of the market from a sector perspective, once again, Tim, how does it go? It goes economy reopening, excuse me, based on vaccine distribution, everybody getting back out to post-pandemic way of life.
Sure.
Well, that theme has shown a little weakness in recent history from a technical perspective. Well, looking at that theme, finance, basic materials, industrial, and energy. Let's look at those 4 sectors specifically. The 2 highest rated components of those 4 is finance, which Gino talked about. Let me take a quick peek at finance. Now, finance for me had an interesting week last week. Number one, I think you gotta love the technical scenarios here, Gino. Very consistent.
Oh yeah, they're all
very consistent, right? Not a lot of random volatility, not a lot of random, oh my goodness, why did it break down, right? Why did it break down on that one 5-minute chart for 2 minutes, right? You didn't see a lot of that. Very consistent. Last week, let's just kind of dive into this very quickly. Last week, we break out. Not strong, but we do break out. And then it just plays defense. And like we talked about last week, right? We always have these internal debates. Is it good? Is it lack of offense or is it good defense? Which one? Is the glass half full or is it glass half empty? And everybody's going to have their own unique and personal perspective to that, right? When it comes to the breakout. In a bull market, I always look at that. Let me put it like this. In a football game, I feel like if we can get the defense taken care of, the rules are set for the offense.
Makes it
all
a lot
the rules
easier.
are set for the offense.
Sure.
And so if the defense can take care of itself, and if we can get that locked down, with all the rules being established for the offense is going to get there at the end of the day. Okay. If the market plays enough defense, all the rules are established for who in the market, guys?
For the bulls.
It's for the bulls. All the rules are established for price appreciation or price discovery. And so the offense is going to take care of itself if the defense solidifies itself. And so, again, that's just my glass half full type mentality when it comes to the defensive nature of the market in a bull market. Well, you got to like that in finance. Yeah, maybe you wanted to see Goldman, JP Morgan, Citi, Bank of America run. That's fine. But there's a lot of different trading systems, guys. A lot of different trading systems, both from a directional cash flow volatility perspective. And so the defensive nature of the financial sector I thought was important last week. And when you look at this from an intraday perspective, let's take a look at an hourly chart, Coach Frank's favorite time frame. You see that resistance channel all 2 weeks ago solidify itself right there at 38. And then let's just dive into last week. You didn't really violate any support level last week, guys. Yeah, you didn't get the ump, but you didn't violate not even an intraday support level last week. And so I do think you got to be and again, we didn't upgrade, but we didn't downgrade. And so you got a little slowing momentum in the pattern, but until you violate a support level, I just don't feel comfortable downgrading an area of the market in a bull market, especially in the lull of the summer where we haven't seen a lot of price discovery in the lull of the summer. And so we're still looking at a 10-point rating in finance. Gino, and I want to bring Coach Mark into this as well on the commodities in the basic materials. Looking at basic materials, unlike finance, and guys, in the scatter report meeting on Friday, I actually made a fairly lengthy argument of the separation of certain sectors at the top of the market. And regarding industrials, we actually downgraded 5 points in industrials because unlike finance, I think you are seeing a little separation in industrials, in basic materials. And the theme is, maybe not the theme, but the conversation is shifting there a little bit too from an infrastructure perspective. And so they are separating just a little bit. Nothing dramatic, nothing to be too overtly concerned about, but they are separating a little bit. And I feel like materials, as tied to industrial, is separating it a little bit from, say, finance and energy. And so when you're looking at finance, that 10-point rating based on the defensive nature, you have a 10-point rating in materials, 15-point rating in industrials, 5-point downgrade in industrials, and then energy, nice little upgrade into that 20 spot too, and energy technically breakout. And so when you're looking at the theme of the market, we don't really need to discuss what's going on in industrials or quite frankly, finance. We've already kind of had those conversations. But regarding energy and basic materials, I'm going to start with Coach Mark, then go to Coach Gino. What's your read here in those areas of the market, the ones that really kind of commodities impact?
Well, I'm going to go over length oil again in the commodity section.
Mm-hmm.
I think there's catalysts. I think there's moves up. Materials I continue to like, especially from a cash flow perspective, in a buy the dip perspective. I don't think that move has gone away. I think there's still legs up there. But on finance itself, I mean, I continue to hear people have positive chatter about finance being kind of like the Goldilocks sector right now. If inflation happens and interest rates go up, banks tend to benefit. If it doesn't, well, banks are going to benefit. And so it's almost like this Goldilocks feel for banks right now.
Well,
like
if interest rates don't go up, then they're just going to get QE money for the rest of their lives.
So it's like
and if interest rates do go up,
what a
they're
shock!
Gonna make more money.
In our system, the banks are going to do well.
Yeah. They got a very defensive feel to them right now.
You know, and so, you know, even if the market, and this is the case always, this is why we lead off every week with sectors, because no matter what the market's doing, trending, uptrending, downtrending, sideways, there's always seems to be a theme that's driving certain areas of the market to give you more confidence in.
But that theme over the last several months now is starting to at least very subtly separate itself just a little bit. I mean,
I think it is.
Materials are weakening here today. I mean, if we had today's candle, Matt, that'd be a downgrade. I mean, it just would today. If we had that, force our hindsight 2020, materials would have been downgraded 5 to separate from financials. Financials is still
some coaches wanted to downgrade. I'm not going to say which coaches.
Sure. Industrials did catch the slight downgrade to kind of represent that separation that's happening. And then you do have this energy sector still getting upgraded, still looking very good in my opinion. So it's an interesting market from that sector perspective. I see energy racing up the charts, getting better, developing its chart. I see some subtle stuff happening here. It doesn't mean you don't look for opportunities in industrials and materials, right? I mean,
I mean, you're still talking about the strength of the market, and you're still talking about long-term charts intact. No, I'm just saying there is a slight separation from a theme as well as from a price perspective when you're looking at what's happening in energy versus basic materials, and when you're looking at what's happening in finance specifically.
And I think you guys' point is a spot on point, and I think it is the major point in it, because sometimes trading's easy, and once again, like you're saying, for 6 months, the value trade, the rotation, and everything was lumped together, right? And I think it's critical to identify when the separation, because that doesn't go on forever, and there gets to be where things have their own independent storylines and this and that. And I think it's important to note the subtle differences that are occurring, because I think energy and finance might outperform here.
Well, and so do I. And so do I. I think energy and finance, of those 4 sectors right now, I still think you got confidence in some areas of basic materials. Yeah, they're getting taken on the chin here today. But I have a lot of confidence in certain areas of the basic material space, and I got a lot of confidence in certain areas of the energy space. The slight separation is at this point slight. It's not that, but when you see sectors and themes rotate, Mark, you make a wonderful point in the sense that a key indicator there is it doesn't get easy. It gets a little bit more difficult. And things that had a tendency to run together, and for months, it felt like specifically finance, industrials, and basic materials were running together. Now they kind of feel like they're separating just subtly a little bit. And so we are seeing a little bit of separation of that. But again, the conversation we're having right now is changing as well from what we were talking about in the first few months of the year.
Sure. Yeah.
Yeah.
I think
so. So like I pointed out in the newsletter, When I look at the sectors, it's infotech, of course, healthcare, financials, discretionary, and communication. That is the market right there when you're looking at the sectors. So you can play the sectors any trend you want, but the ones that are really controlling the market are the big 4 and 5. Like when we got down to staples last week, we were talking about it. There's a lot of good setups in staples. It's just not a big market mover. But now when we talk about energy and materials, yeah, great. I love energy. It's a great sector to play right now. Mark and I are big into oil. Materials, it's been hot, but materials is less than 3% of the market. It could have a really bad down day and the market doesn't even notice it. But it's funny how the market is matched up right now. On the sector report I was doing, yeah, technology is the behemoth. But then when you break it down, it's really like healthcare versus healthcare and discretionary versus communication and financials right now. It's like two different teams. So our downgrade on healthcare is, which 13% of the market, there's some big players in there that are kind of worrying me, that are setting up to the downside. Like if you look at Johnson & Johnson, United Healthcare, Merck, and Abbott, they're setting up with some bearish triggers. And we did downgrade them because of that on Friday. We did downgrade because those are some big names that could hurt that sector. And as far as discretionary, same thing. There's some bad setups in Tesla, Home Depot, and Lowe's, both of those, those are the big movers. And healthcare and discretionary are the same market cap as technology. So you know what I mean? So it's kind of like if those both go down, technology can hold them up. It's almost like a game, right?
Well, yeah, and I guess this is just from my perspective. When you're looking at healthcare, you got to be looking at healthcare as neutral at this point in the short term. And that's the downgrade in healthcare.
Yeah.
It's the violation of support here. It's the double bottom on the 50-day here. It's mixed technical analysis in the short term. And so you got to respect short-term and intermediate analysis. And so when you're looking at multiple time frame analysis, right, and you have a short-term neutral trend followed by a preceding upward intermediate trend, as you can see on the weekly chart, yeah, you're bullish, but you got to respect pivot confirmation from a short-term perspective. And so the downgrade was because of this violation of support coming back down into a similar support channel at 121. Now you're looking at neutral. When you mentioned comms here, and comms, you're looking at short-term bullish uptrend, high base, threatening a potential breakout. And unlike healthcare, which is showing some love today, no doubt about that.
Well,
but I think it's a little bit of false flag here because you're not seeing it across the board in healthcare.
That's right. 100%.
Right. Yeah, that's what's weird. Again, in healthcare, when you break down the big names, they're not looking good. When you break down the healthcare, just like Johnson
again, United Health threatening a violation of 400. Johnson & Johnson threatening a 165 support level.
And Merck.
Merck. But Tim, you wanted to add something to it.
Yeah, there is one notable name in healthcare that's creating a little bit of a bump today. It's Eli Lilly, by the way. Healthcare is moving into a neutral range. You can get swept up in healthcare news day by day, and it can impact day by day performance. You got to look at the overall big picture trend. Lilly is a key producer and developer for one of Biogen's
big name in that sector too. And
Biogen is getting FDA approval for their Alzheimer drug. That's the rumor here today. I think those news are hitting the headlines. So when you get the fifth largest component up 12%, it's going to drive XLV maybe 1%. But the pivot relationships in healthcare are so clear right now. It's moving reality.
And that's the thing here. When you're looking at the heat map, one company really kind of stands out. When you're looking at the sector, you're like, oh, the sector relative performance, relative strength here today, up 1%. S&P really kind of just doji fast. And so you're looking at relative, but again, I feel it's a false flag given the fact that major components of the healthcare space are here threatening violations against short-term support levels. And Eli Lilly is just going like gangbusters here on a Monday morning. So it's given a little bit of false flag, but in communications, and Jenna, you mentioned that, you're looking at that as a little bit of a bull flag, maybe a high base threatening a potential breakout. And you're talking about one of the biggest components of that, looking at a very, very clean and potential very powerful breakout of 2,400. Another very important
Facebook
component of the
today,
Facebook trigger today. And like I said last week, whether you were looking at Google or Facebook, I personally was looking at Google, but whether you were looking at Google or Facebook, both of them were fairly clean. I would put Google more clean from a breakout, but it was Facebook that really kind of drove here today. I think your confidence, if you're looking at comms, for example, versus healthcare, I'm going to shade comms. Yeah. I like comms more.
Yeah, definitely by far. And but it is. I mean, the stocks you just showed in there, they are like half that sector.
Oh, they are the sector.
They really are. I mean, you go to Netflix. Netflix down a little bit today, but just not in Walt Disney.
It's like Amazon and discretionary. Discretionary. You actually have some companies setting up in discretionary, but here's old Amazon. Right, again, another support
Amazon's
violation.
Starting to look a little bit. That's a little threatening there when you look at it.
Yeah, and that's going to obviously pull down.
Yeah, so that's the problem with the discretionary sector is, well, first off, it's 12% of the market cap, right? Yeah. And it's really like, okay, Amazon, it's discretionary. Facebook and Google, yeah, they are communications, but back in the day, they were technology. Okay. They broke them off and put them in their own sector. They are like a sector of a sector, right?
Well, they were only technology because nobody knew where to put them.
Right, right.
Like we threw everything in discretionary or technology because we didn't know where to put them. That's why I feel like what the S&P did with the communication sector a couple of years ago was very, very wise.
Right. And real quickly,
we were putting too many stocks in there that didn't really fit. A semiconductor company is a technology company. Google, I don't know. Marketing?
Well, the other thing is when they split Google up, they list it twice, like because it's two separate stocks, right?
So let's do this to finish up our conversation from a sector perspective. Let me take a quick peek at just the sectors from a technical perspective. You're looking at basic materials. It had a fairly clean ascending triangle coming into a potential breakout. Little choppy waters here. Need some time to clarify, threatening a little bit of violation. Remember, pivots, when they get violated, you're looking at downgrades. This is a potential violation of pivot, violation of trend and pattern. You got to be a little concerned with the material space in general, but not overtly concerned. We're talking about neutral against short term, against an intermediate backdrop that looks like that, guys. So the concern is just short term.
Yeah, and Matt, you've picked up on a couple of these little subtle differences. I remember on oil, when oil was trending up 3-4 months ago before it started its consolidation pattern. It's the nuances, it's the little things like that, it's the pivot violation. They can lead to a change in trend or a violation of trend and different price action. So I always appreciate that insight.
Well, and when you're looking at materials, again, it can recover here. And I don't think that weekly chart is very strong, guys. Is very strong in materials. And even a short-term violation all the way down to 85, I don't think you're concerned against that type of trend here. But in the short term, you're probably just hesitating on any short-term trades. Energy, little overextended coming into the breakout. Would not be surprised in energy to see it play some defense. As it very similar to finance, quite frankly. As you saw finance break out last week, what did it do? Short neutrality range, really playing defense there. I wouldn't be surprised this week in energy if we do one of those weeks where we just say, okay, is this legitimate? Right? If we have one of those weeks where we just want to see that, really shore up that 56 trigger, you're starting to see a little bit of 56 analysis on the intraday. Really over the last 2 days, you had an opening wick over here at 56. You had a 56 wick on the opening here as well. And so you are starting to see a little evidence at the top end of this breakout showing a little weakness there. So you certainly could see some consolidation between 55 and 56. And then the continuation trigger for me in energy would be above 56.08 at this point. But let's see that shore up this week, especially given the fact that energy has ran a pretty decent distance here in the short term, guys. We're talking about a sector that's up about 5 points, up about 10%, literally in the last week. Nobody would be shocked or surprised if it does play defense this week, maybe even a little bit of a bull flag pattern as that 9 EMA does catch up to it. But I do see that as strength. Technology's fighting against that head and shoulders breakout that we all kind of like, continuation trigger above that 140 level. Discretionary, as we discussed with Amazon, showing a little bit of weakness. In Friday in the scouting report meeting, we had a little bit of prolonged conversation on this pivot point right here. And if this pivot point right here could establish as a new support level, and you're looking at that as a higher level of support, meaning that breakout. Well, we still got to fight against that 9 EMA. Look at that thing. Your girlfriend's playing a role here, Chucky. Still got to fight against that. And you obviously got to fight against what Amazon is doing in the short term as well. So probably an area of the market that needs some time to solidify itself. Staples tried to break out, looking at a fake out, reestablishing that trigger in Staples. Utilities is kind of a gobbled mess right now. Healthcare, we talked about extensively. A little bit of false flag here with Eli Lilly. Most of the sector is showing a little bit of weakness. Overall short-term neutrality with pivot confirmation all over the place. Industrials is showing a little bit of weakness as it fights against this resistance. Unlike finance, I think that weakness is a little bit concerning. Again, we did only downgrade 5, but it was a 5-point downgrade. Finance was discussed. We're looking at that 38 support level with a continuation trigger above the high base. That looks fairly decent. Communications, the sector looks better than underneath the sector. A lot of what is happening right now is Facebook and Google. Took a look at those. Let's see both of those break out, and that should carry the communication sector. And then real estate is just going gangbusters right now, and it's just momentum trending, and nobody knows what to do with real estate when it momentum trends. Literally nobody.
REITs are not supposed to momentum trend, but it's a juggernaut here lately. I appreciate the breakdown, guys, the analysis and all the different sectors. Let's move right into our commodity analysis next in Commodity Corner here. I know, Mark, today you're going to be highlighting oil, I believe. Is that right?
I am going to be highlighting oil.
So let's take a quick peek at the metals just as a group then, and then we'll leave the oil analysis for Mark a little bit. There's not much going on outside of that. So Maddie, gold here just hanging around 1900, still on that same trajectory, bounced right off of the dip it had last week. Little doji. Anything you've seen in gold you want to break down?
No, like I said last week, just wait for it to catch up to my trend line.
That's right. And I like that line quite a bit. Quick peek at the dollar and Bitcoin. Then we'll come back to oil. US dollar fading lower. There was some chatter over the weekend that we could absolutely have a long conversation with. We'll probably talk more about it on the podcast, though. Janet Yellen said interest rates, moving higher would be nice, Matt, and actually a plus for the U.S. economy. Kind of hinting at some patriotism, themes behind it as well. What was your read on what Yellen had to say?
I don't have anything positive to say.
Yeah, listen, you want to, come on. You want us to talk about that for 40 minutes, lead with it.
I'm a glass half full type guy right now. And what Janet said, Janet, you were kind of in a position to do something about it.
Right.
I'm going to leave it at that. But you were in a position. And if you're truly going to start going the patriotism route with the interest rates, get the hell out of here with that type of nonsense.
Just stop.
Do not question the patriotism when you had quantitative easing directly to the banks to the tune of trillions of dollars. Get out of here with that. I am so sick and tired of the central bank elitism talking to us people like they represent us, like they make their policy decisions with us in mind. Get the hell out of here with that. It's offensive, it's disgusting, and it's completely wrong. And Janet, once again, you were kind of in a position as the most powerful person in the world, as the central bank president of the United States controlling the reserve currency, to do something about it. And yet you were a coward and done nothing about it. Nothing. So get out of here with that fake patriotism nonsense.
The dog and pony show out of policymakers right now.
Disgusting.
It's disgusting. I mean,
right.
even if you agree with sentiments,
everybody's got to be a patriot to pay more interest rate to the banks.
And
really?
Too. Yeah,
Get out of here.
Get out of here. Get out of here. Get out of here. All right, quick look at Bitcoin, then oil market.
The devil of the 21st century is the United States Central Bank.
The bankers. I agree.
They will be regarded.
History will not look kindly on these people.
Mark has a lot to say about
patriotism.
I have a lot to say about
this.
Podcast. Let's do it on the podcast because it's just wrong.
I agree. A quick peek at Bitcoin. It's stuck in its range. There's not much there. I did see El Salvadorian president is potentially talking about making it a full legal currency recognized by the law. We've seen some of that stuff before. That was the only headline I did see in Bitcoin. Till it gets somewhere out of this box, Matt, I'm really not too interested in what the technicals are showing as long as it's in that consolidation. Anything you see in there you want to add to it?
Well, if El Salvador embracing Bitcoin can't break Bitcoin out, what can?
What can?
Yeah. Are we at that point in the conversation with Bitcoin? Really?
I guess. All right, last segment here, guys, on a Monday, breaking down the markets, getting started for the week here with Tackled Trading. Marky, you wanted to kind of reserve oil analysis for your commodity corner and your highlight. And, Coach Mark over here at Tackled Trading, everybody, if you're a halftime crew, you know him. He's here every day. He runs our customer service, podcast producer, wonderful host and coach. And commodities are one of his passions, no question about it. And he runs our commodity corner, our commodity report on the weekends as well. Marky, what you got here for crude oil in the commodity corner?
And once again, Tyler said something on Trade Masters that I really liked. He was bringing up a stock this last Wednesday, and he was like, "Listen, I brought up this stock before, but if it's not broke, don't fix it." And when I was like going over it in my head, I had Joe Pesci saying, "If it's not broke, don't fix." So Joe Pesci,
if you had committed just a little bit more, I think you could have got there.
I just, once again, no
go
coffee,
Joe
no
Pesci,
coke.
You have to commit.
You
like
got to
Tim
go Joe
commits to
Pesci. You got to be
Jones.
But the point Tyler was making is a good one.
Yeah.
You don't make extra dollars for creativity. You don't make extra dollars because you're trading hard trades. And sometimes you will find, look at copper for the last year. Look, like sometimes you will find something that works, that you have a good feel for, that you like the story, and the story doesn't change, and maybe even the story gets stronger along the way. There is nothing wrong with trading the same stock or the same area over and over and over. If it's working, it's working. If it's working, it's working. If it's working, it's working, and keep at it. And that's how I feel with oil right now. The macro things, and I'm not going to go into full dive. We've spent a lot of time this year here on the halftime report and the podcast talking about the big picture of oil, right? The big picture of oil, how it benefits from a reopening of the world economy, right? Pent-up demand, travel, how consumer prices probably aren't going to impact that travel. Higher gas, well, when you haven't vacationed in a year or a year and a half, I think people are going to pay it in the pocket. We've talked about OPEC, and they're doing a good job of curtailing the supply side of it. So the whole equation, we talked about U.S. production, how it was cut dramatically in the pandemic, and you just don't turn on rigs overnight. That's a process. So everything was lining up from a big picture analytical standpoint for good, healthy oil prices this year. There's been a theme behind it, and so the reason I'm bringing it up today is because we had a little breakout last week, and we had OPEC come out, and they reaffirmed that because this is one of the things, you develop a thesis, you develop a theme, you develop an idea, and then when there's new information, you have to keep an open mind, because sometimes it will blow up, sometimes it will be reaffirmed, sometimes it'll become stronger. And, once again, reaffirmed last week, OPEC, that they're going to gradually keep to their April guidelines that they put forth, Russia on board, and gradually increase the supply in the coming months. Now, at some point in the future, 6 months, 16 months, I don't know. Russia's going to open up the points hard. Supply numbers are going to be high. That's a conversation we'll have 9 months, 16 months, 26 months, because you don't know the when. But in the next 6 months, in the next 3 months, in the shorter positioning trade environment, when we get reaffirming catalyst, and then when we get technical signals, and this technical break last week was not only the break of a short-term consolidation range that had lasted a couple months, something I like to refer to as multi-month consolidation. It's breaking some levels that existed before as well, getting that oomph above it. Plain and simple fact is, I think everybody's anticipating higher gas prices. Everybody's anticipating pent-up demand. I mean, this is one of the things that, we were on this months and months and months ago pushing energy, but there's still legs up, I believe, in this trade, and particularly from a cash flow, particularly in those energy companies, which is a reminder, some in particular like Exxon, who had truly outstanding earnings reports, very constructive of what they've done in the last year. Higher energy prices benefits oil companies. That's not a shock. You don't need me to tell you that. But with the oil breakout itself, I think it provides opportunities. A plus from a cash flow standpoint, in my opinion, on energy companies, but also to look for those directional movements, because price movement is fast. And while price movement can be very fast and very sustained, look for those signals, because when I get a breakout on the commodity, it's only a matter of time if that breakout is legit. And like Matt said, it might take a day or a week off, and that'd be healthy to test to make sure this is okay. That would be normal. You don't want it high flying. You want gold's trend from the last couple months. You don't want AMC's trend here. But I think there's some constructive, and I think there's a leg up, and it continues to be an area of the market that treats me very well from a cash flow. It's been a very good cash flow year in commodities. It's been a very good cash flow year on oil. The theme is still there. If it's not broke, don't fix it. Keep going to the well.
Yeah, we're talking about year to date, the best sector in the market, right? And the entire argument in the energy space has been catch up, and not just to crude oil's chart, but to the rest of the market, right? Whereas the rest of the market has recovered pandemic price. What's energy doing? Last week, breaking out of pandemic price. And so when you're talking about the key levels of the market last week, yeah, you can look at the market indexes and you can really gravitate to certain numbers. But when you're talking about the numbers that, or the important resistance levels that were violated last week in both crude oil and in energy, I think that's impressive. I think it's very impressive. When you're looking at crude oil here, breaking out against that 66, 67 handle, breaking out on a no-sell week, coming into that 70 handle, very positive. When you're looking at it from a trend and pattern perspective, you obviously are looking at this bullish from both a short-term here and an intermediate there. You're looking at a bullish retracement that is that cup and handle, maybe a little bit, ascending triangle, maybe a little bit, high base over the course of the last week, maybe a little bit. But regardless of the continuation type pattern you label it as, you're looking at the importance of that 66, 67 handle, and you're saying, I like that breakout. When you're looking at energy and you're saying, okay, energy, again, the argument, catch up. Well, energy last week finally gave that breakout of that 55 handle where old support, pandemic, you saw what transpired. Then finally here, we're breaking out. Now, obviously, in the crude space, and market could play some defense. It could play some consolidation, and that shouldn't concern anybody as long as those breakout channels of 55 in energy and 66, 67 in crude don't get violated. And so it's a fairly simple analysis there. But when you're looking at this from a technical where can it go perspective, well, the continuation trigger would be above 70. And I think that's pretty solidified here on crude oil. Where can it go? 75, 76. That's where that next stepping stone really is. 67 was 70, 70 is now 75, 76. And so you're looking at a price target in the short to the intermediate range in that 75 to 76 level. That's pretty legitimate for a crude trade, and that's pretty decent price appreciation in the short term if it does achieve that. Energy, you're staring at. You just can't get away. Your eyes cannot get away from that 200-day moving average at this point. You obviously saw the importance of that 200-day moving average on the weekly chart there. You saw it play a significant role here as well. And this is really lining up for the first test of that weekly 200-day moving average that it's had since April of 2019. And so we're coming into that very, very important long-term resistance channel. And although I do feel that is a price target where you're looking at that in the 57 handle, so the price appreciation in the short term in crude probably has a little bit more legitimacy than the short term in energy. But I love energy above 57. I love it above 55. But if you can get above 57 here, there is nothing that's going to stop this trend from continuing. And no, Mark, I'm not projecting, 100% rate of return. Not. I'm projecting consistency. And in that consistency, you have confidence in breakouts from a short-term trading perspective. And you have a lot of confidence from a cash flow perspective with naked puts, boomerangs, covered calls, cash flow strategies, because of what is happening from a price perspective. And so, yeah, I do think a spotlight on energy right now is legitimate. It's really lining up with the strength of the market. Kind of, it doesn't look as good on the long-term charts because of the recovery analysis in energy. But in short term, I'm not sure there's a better area of the market in short term right now than the breakout of 55 on energy.
And that's from a directional, and even if that directional,
cash flow,
from a cash flow, it's just so easy right now. And I know Tim hates the word easy. I just like, it's
easy's
like
relative. It's just relative.
Easy is relative, right? But it's like when energy went down like 5-6 weeks ago, I was like, I don't care. I believe in this theme, and it just, I just think it's just a great cash flow environment with directional opportunity.
Yeah, if the confidence in directional systems is increasing, then obviously the confidence in multi-directional systems is massive. I would certainly agree with that.
Agree. Yeah. Because quite frankly, crude breaking out of 66, 67, like you highlighted on the technical chart, Matt, as long as we hold the breakout channel, even if XLE doesn't run 10%, you got to feel very confident about corporate profits and all the backstop and all the themes that you guys have been detailing. So I like it, guys. I appreciate that, Mark, for running us through crude.
And honestly, Tim, if we were talking about energy stocks at the top end of the range and fighting against all-time breakouts, I would not have the fundamental belief in this space as it does in recovery analysis.
That's
right. And if you're out there saying, because I know like energy is one of those things, and I'm not talking about tackle trading members necessarily, but it is criminally underrepresented in portfolios. Because energy stocks stink, right? Blah, blah, blah.
For 10 years, they chase growth.
Exactly, right? So I get it. I understand. Yeah. And someone might ask, well, have I missed out on the move? Because it's a question I always ask myself, because I wish I would have caught the bottom or somewhere near there. I don't think you've missed out, especially from a cash flow perspective. But
guys,
I energy companies did amazing things in the pandemic to get leaner and meaner. So
missing out on something is a matter of perspective. At some point, the Dow's at 100,000. So it's always a matter of timing and perspective.
That's right. That's right. All right, guys, let's move into our last little thing here today, Matt. I just had a question for you in general, as we're kind of moving towards the end of the show, first trading day of the week, getting everybody prepared out there. As we're walking through the markets, what catalyst moving forward over the next week or two do you think actually can start driving and moving prices? What are you going to be watching over the next week?
Well, from a big picture perspective, I just think on a Monday coming into the week, it's always important to identify what are those potential catalysts that could impact price. And when you're looking at that, you always look at it from okay, what are the important earnings reports that are coming out that can drive market price? What are the important economic events? And what are the important political conversations and situations that occur that could obviously impact price as well? And from a earnings perspective, we're kind of done with earnings, but you're always going to have some earnings, because the way companies report earnings. Not a lot of big names from an earnings perspective this week. Couple important names though for us at Tackle Trading. First of all, semiconductor company Marvell Technology. They're going to report earnings later on tonight. Momo, dirty sexy money candidate. Momo had an opportunity to get Momo, got snuffed out and back into that same degree of neutrality. Can earnings, be a catalyst for price discovery here on Momo? We'll wait and see on that one. Obviously, it just has not had the ability to get anything long term. Short term, we've seen some good trends, but nothing long term. So, for me, a little stock like Momo, that's important, but obviously not to the broader market conversation. Momo reports earnings tomorrow. GameStop is obviously going to get a lot of conversation this week. We saw the meme trades or the meme army, I want to call them. The meme army wake up a couple weeks ago and really caught fire last week with AMC. GameStop obviously in that conversation as well. And GameStop reports earnings later on this week. I believe GameStop reports on Wednesday. Restoration Hardware, Chewy, they come out this week as well. Nothing broad market that has a major impact from an earnings perspective, just really kind of, some key companies that certain investors and certain traders like to track. Economically this week, the CPI report is the one that we're going to be talking about. Obviously, that's 1A, 1B from an inflationary perspective. PCE report is probably 1A, CPI 1B there, and obviously inflation has taken on the national attention here. And Janet Yellen's going to tell us to be a little bit more patriotic when that comes in a little bit higher than we want it to be. So CPI report's going to have some conversation this week, and certainly can be a major market driver. But outside of that also, and that's coming in on Thursday of this week. Friday, you got a little bit of a minor report with consumer confidence. But for me, it starts in the U.S. this week on Thursday with the CPI report. Broad market international, you do have a couple central banks that will report monetary policy in both Europe and our friends to the north in Canada this week. So that's going to have a bigger impact on currencies than it will in the market. Maybe Europe will see what old Christine Lagarde has to say about European central banks, their policy on Wednesday. But outside of that, don't really see any major market drivers, especially as we're so tight against the U.S. reporting next week. And so with Europe and Canada coming out this week, a little bit of a precursor to the U.S. reporting their central bank monetary policy next week. So could have some fireworks in the currency markets, but I don't foresee something happening from a central bank perspective until we start getting into next Tuesday, Wednesday, when we start talking about the United States Central Bank. And then politically, the only conversation that does interest me politically from a market perspective is we're having more conversations on infrastructure and the potential of infrastructure. And again, we've had many conversations on the potential of infrastructure. So that is going to be heating up a little bit more. And so that's going to have an interesting impact on the market as well.
A lot of things to keep an eye on over the coming week, obviously, and we're going to be breaking them down as they happen one day at a time here on the Halftime Report. I got to break one quick story here before we wrap up. Look at Biogen. We got to look at Biogen right now.
Yeah, since we've been talking, Alzheimer's disease drug approved, 50% jump midday. If you triggered in, what do you do, Tim?
You take profit. Everybody else is taking profit. You take the gift of the trading gods. That's what you do.
Hey, intraday move, that's bigger than AMC, man.
I'm more interested in the real life story on this one than the
too.
potential on a stock. This is the first drug cleared by the U.S. FDA in more than 2 decades to help people, with Alzheimer's and whatnot. This one, Matt, and this is why Biogen has been so volatile over the last couple of years. If you look at a lot of those gaps, it's
all this.
It's the whole thing. I mean, they were rumored to not get approval, then this and that. They finally did get approval here from the FDA on this drug that they've been in, development.
It's been 2 years. It's been 2 years. It's this price movement. It's this price movement. It's this. It's this. It's this. It's been a stay away for us ever since the gap down. But I honestly, a lot of these healthcare conversations, but my pay grade. But it's a really cool human interest story for me.
Yeah.
Right. It's a really cool human interest story. Good on Biogen. Let's see what happens with them and Eli Lilly. But from a price action perspective, Biogen has long for me been a stay away.
Yeah, you stay away from it.
It's a tough one to trade, especially.
Well, yeah, that's why when Gina said, "What do you do with it?" You take profit like everybody else. Take the gift.
Yeah.
So another thing is, right when I saw the breaking news on that, right away my brain goes, "Oh, check the healthcare sector," because that's what we're waiting for, right? Is because we got a slight downgrade on healthcare. I jumped over there.
I don't know who's waiting for it.
Mm-hmm.
I'm not waiting for anything on healthcare.
No, I didn't change healthcare sector at all. So just in case you're wondering,
less than zero interest on healthcare right now.
Yeah, it didn't help healthcare at all.
Yep. And then one last one here. Jeff Bezos in July is going to be flying into space with his brother, Matt and Mark. You guys want to take a space flight with me, head around the moon? Maybe, I don't know.
I'll cheer you on.
Kind of a cool story, though. Put your money where your mouth is, kind of thing. Obviously, so many billionaires flooding into space, technology and travel, and Elon Musk talk about it all the time.
Like, are we talking like real space? Or are we talking like
kind of fake space?
Are we talking like?
I'm not a NASA astronaut, but it's where they fly.
I feel like I was on a flight to India one time, and it felt like I was in space. It just did.
They're going to level up. They're going a big step higher.
So are we talking like 46,000 feet instead of the 42? Like, I kid. No, I don't. Nobody else cares. Amazon's selling on the news.
Yeah. Well, Amazon's just stuck in this range for 8 months now.
Yeah, that's what our management.
We're going to see a lot of stories of Bezos doing random things now that he doesn't have a job.
He's not going to be the CEO. Yeah, he's going to do all kinds of stuff. Sure.
Bezos on a beach in the Caribbean. Okay.
Rumored he might be interested in buying the Chicago Bears football team. Actually, I read that recently. But that's a conversation for us offline. I'll give you guys the details on that. As a Bears fan, I would welcome it. All right, guys. Let's get some final thoughts here. Let's roll into that. Marky, you first. Final thoughts for the team.
Yeah, listen, a lot to cover today, but really, for me, the broad market's at resistance. I respect resistance. I add exposure when I get a confirmed breakout according to my rules. But until you get there, listen, I'm very hesitant at resistance. Respect resistance, and you won't be disappointed over the years.
Gino, final thought from you, sir.
My interest is, like I said, broken down. I always look at the big names of the sectors, but what is amazing is the small caps are holding the market up right now. And like Tyler said last week, the Russell's giving a nice push. Let's see if we get that fall through tomorrow. Keep your eye on discretionary because some big names in there are not looking good. That's it.
Maddie, final thought from you, sir?
Yeah, the Russell 2000 is kind of the storyline here today, but it's got to have follow through.
Mm-hmm. Yeah.
Can't be a fake out. It's got to have follow through. We've had too many tests of wicks nonsense up there. Let's see some strength here on the Russell 2000 to make it legitimate. But it's got, again, there's always these moments in time that are important for the market. Looking at the Russell 2000, it's got that moment in time where it has the ability to break out and have a legitimate leg up in the market. Whether or not it does or not, we'll have to wait to see that transpire, but it has that opportunity. And quite frankly, so does the S&P 500. You're looking at fighting up against a resistance time frame. You're looking at this in the short term as a high base with a potential breakout. You're looking at that on the weekly chart as enough time in consolidation to legitimately see another breakout and legitimate run up. So, hesitation here on a Monday in the broad market, but I don't think that changes the overall opportunity that if we do see this breakout occur to get a legitimate leg up, and maybe we get that 4,400 level in at some point during the summer, I think the story of the day coming into the market is the Russell 2000 here today, and to see if it can legitimately have some follow through coming into tomorrow. I think the close today is going to be telling on the Russell, quite frankly, and I think that's going to have a pretty big impact on whether or not it does follow through or not.
Mm-hmm. Leading index today. Appreciate.
Oh, and then Monday, I mean, Trading Justice podcast. I guarantee I'm going to have some patriotic thoughts today.
I think we're going to have a few conversations on the podcast, as a matter of fact. I'm looking forward to them, actually.
My patriotism questions? Really,
Janet Yellen.
Really,
if you're a relative of Janet Yellen, please don't listen to this episode.
Really,
today.
Janet?
I thought she was your girlfriend, Mark. Don't bring
Not anymore. Not after that comment.
I don't like people who use true patriotism or the concept of patriotism to achieve their political or ideological or monetary goals.
Fake patriots.
It feels, it's disgusting when a human being does that. Don't tell me what's patriotic to get your agenda across. It's disgusting.
Yeah. And Janet Yellen, you were in charge for a long time. So we'll talk about it on the podcast. I'm sure we all have.
So does that make Janet, like, if it's patriotic to embrace higher interest rates, what does that make Janet from 2012 to 2018 then?
Janet, where were you? Where was your patriotism?
What does that make you, Janet? Does that make you a traitor? Like, what does that make you? If it's a patriot to embrace higher interest rates for the American economy and the American way of life, if that's patriotism, then what is it that you did for the last 10 years? I would like that to be answered, Janet.
I would love to hear an answer from that, Janet Yellen.
So, like I said, if you're a relative of Janet Yellen, don't listen to today's podcast.
Yeah. All right, guys, that's it for today's show. By the way, if you're out there watching the show right now, appreciate you guys as always. We are marching towards 20,000 subscribers. Become one of them. If you're brand new to this channel and you enjoy stock market content, we break down the markets one step at a time each and every day, top-down analysis style. Click on that subscribe button, click on the bell, come back and join us each day when we do go live. And Team Tackle out there, make sure you go check out the weekend reports. I got to tell you, a lot of great technical setups over the weekend. I was going through them this morning. Really, really good potential patterns that are developing for trades this week. And if you're not yet a pro member, 15-day trial to the pro membership in the comments of every one of our YouTube videos, or you can just head over to tackletrading.com. There's a link right on the front page as well. We're out for today, guys.